The 2020 recession. We are coming to the end of a decade of cheap debt which some African countries piled on in the latter half of that decade. There is a real risk, with the likelihood of global recession in 2020. Commodity prices will fall as demand drops. Several African countries might struggle to manage their debt servicing, especially if interest rates continue to rise. So if there's going to be a recession in 2020, if the pessimistic signals in the financial markets prove correct, how would it happen? There are plenty of clues in the details of recent economic reports, in signals from the markets, and in the recent history of recessions and near recessions. President Trump on-again, off-again execution of the trade war with China and other countries has fed uncertainty into businesses' decision-making. Corporate investment spending is softening, despite the big tax cut that Mr. Trump said would boost it. Almost half, 48.6% of 212 U.S. chief financial officers believe the nation will be in recession by the end of 2019. And 82% believe that a recession will begin by late 2020, a presidential election year, according to the findings of a recent Duke University CFO Global Business Outlook survey. Meanwhile, a group of 53 business economists predicted the risk of recession to be at 20% by late 2019. 30% by late 2020 and 50% in 2021 or later, according to a December report by the National Association of Business Economists (NABE). As Bloomberg reports, the likelihood of U.S. recession before the 2020 election has grown based on changes in the Treasury yield curve, according to Jeffrey Gundlach, the chief executive officer of Double Line Capital. We should be on recession watch before the 2020 election, Gundlach said Thursday in London. We getting closer but we not there yet. The odds of a U.S. recession before the election are 75%, said Gundlach, reiterating a prediction he made in August. The average American now has about $38,000 in his personal debt, excluding home mortgages. Well equipped to handle the global recession of 2020? Time will tell. Despite recognizing that debt is dangerous waters, Americans are jumping in with both feet and struggling to stay afloat, and so apparently is the government. Hey, no worries. The federal debt only accounts for nearly 2/3 of all federal spending, or 14% of GDP. If you are younger than the baby boomers, are very much at risk because capitalism as we know it could be at risk. We could face an economic singularity of a global meltdown in our generation. After a remarkable 10-year economic growth spurt, experts are telling us a recession is coming, either in 2020 or 2021. Multifamily market is still in growing demand, that mostly due to millennials and retiring baby boomers who are fueling the demand. While rent growth is slowing, vacancy levels are remaining stable. In addition, construction activity is slowing down in anticipation of the coming recession, which means that there will be less competition in most markets, which should help rents remain stable. If you enjoyed watching this video, please subscribe to this channel and hit the notification button above for more updates. Thank you guys for watching.